and welcome back to another edition of Ask Adam with Rob. I'm your host, Rob King, Realtor at Keller Williams in beautiful Fort Lee, New Jersey. And we have Adam Roberts.
How are you, Rob? How's everything?
Doing well. Yourself?
I'm doing great. Thank you for asking.
Perfect. Who's a mortgage banker at Atlantic Home Loans with over 20 years experience, working with both clients and specializing with agents. So how's everything, Adam? How's the family?
Everything's great, and just looking forward to getting some summertime and some outside time.
I know. It's nice that it's warming up quite a bit.
Absolutely.
So I can imagine right now, I've seen the mortgage rates have been hovering right around 3%. I can imagine you're pretty busy. How about you just tell us what's going on in the mortgage world right now?
Rob, it's definitely an interesting time. I think, you know, if you're in the mortgage business, you're probably happy about it. Any other time, I think if you ask 100 mortgage people, you're going to get a variance of different answers. But I think for the most part, mortgage people are happy. And the reason why they're happy is their phone is ringing, right?
Yeah.
And the phone is ringing with a multitude of different type opportunities, right? So you have your refinances, which are your past customers and people who already own homes looking to save money. And then you have people who are scrambling, is what I would call it. You would be absolutely shocked at the amount of activity and the times that people are calling and the trends and the tendencies. You know, in a normal market, you know, they're calling you, you know, 9 and you maybe get that random call at 7. Now you're getting the calls at 9 and 10 o'clock. And, you know, people are looking to move. So I think there's definitely a lot of activity. And I think it's just a matter of, you know, really understanding what you can and cannot do when you're looking to buy something.
Yeah, there's definitely a lot of activity out there right now. It feels like everything that happened over the last 3 months has been squeezed into a couple of weeks. And there's been several properties that I've had clients interested in, and I just haven't been able to schedule an appointment with them because so many people are reaching out to the agent.
Yeah, it's so extreme. It is. I've been doing this for, I think it's now 22 years, and I will honestly tell you that the inquiries right now over the past 3 months have been more than any other time, you know, in the business. And I think, you know, we spoke about this the other day. You know, what I think's happening is that the people who kept their jobs through this have given themselves a huge boost of confidence, right? That they're essential workers and that their job is not at risk. And if they were on the fence before, this is kind of the icing on the cake. And then on the flip side, you have people who, you know, have a lot of equity in their property, okay? And everything they have is in that house, okay? And as they're sitting home and they're not working, they may have lost their jobs, the bank account doesn't have much in it either, right? So what's happening is you see some people are becoming less confident. Some people are becoming more confident. And so it's leading to a lot of people looking to sell and a lot of people looking to buy. And I would assume as the dust settles, you know, we'll see things calm down maybe a little bit. But I think right now the influx is crazy and the bidding wars are real. And that kind of brings me to something I was thinking about was, you know, you will see a lot of people right now buying houses and looking to put a smaller down payment down.
Yeah.
And I actually think it is a great idea to do so. And my theory, Rob, is that just as I was telling you before, you know, people who have a ton of equity are really betting in the real estate market, right? So I think right now with interest rates being for a 30-year fixed under 3%, okay, not even 3%, under 3%.
Yeah.
When those opportunities arise, you want to take advantage of borrowing the most amount of money. If a client has really good credit, okay, the PMI, which is that monthly fee they pay, is not very expensive. Okay, as an idea, on a $400,000 loan, it's probably with 15% down or 10% down, it's probably $100 a month.
Okay.
But at the same time, remember, an extra 10% down on a $400,000 house is 40 grand.
Yeah.
I've had to pay an extra 100 and know that all my money is not tied up into my house, right? Because if you put $100,000 down on the house and it's worth 400, you owe 3. If the house goes down in value, and we don't know, right? We all like to assume things go up. You just never know, and this is certainly a weird time. and it goes to 300, they have no more money left. The money that they leave in their bank or they invest, I'm sure it's not all going to go away so quickly. And they can always take that money, Rob, and pay their mortgage down if in 2 or 3 years from now they decide that they want to bet on the real estate market, right?
Mm-hmm.
So as agents, what I'll tell you is don't sneeze at the 5 and the 10 and the 15% down offers. If the offers are higher than the 20% down offer, there really is no reason to go with a 20% offer.
Yeah.
The likelihood of them getting the mortgage does not go up with a bigger down payment. It's in the quality of the borrower. Did they make their money? Do they have the down payment? Right? And do they have good credit? If the answers are yes, whether they put down 5, 10, 15, 20, doesn't matter.
Yeah.
So as a homeowner, right, and as an agent, don't sneeze at the 5 and the 10s and the 15s, because those are going to be real deals. And those people might actually be more flexible and going up a little bit because they know that you're looking at them, oh, you're not putting as much as a 20% down.
Yeah.
That makes sense?
Yeah, it makes a lot of sense. It sounds like it's really giving the buyer a lot of flexibility with their money, and then also not taking as much of a risk. Are you seeing a lot of mortgages go through right now at 5, 10%?
All day long.
Are you?
All day long. So, Rob, it's kind of weird when I get a client who's arguing with me. But the other day I had a client who was looking to borrow. It was an $800,000 deal, and he wanted to put down 5%. And in New Jersey, as long as you're borrowing less than $765,000, you do 5% down.
Okay.
Well, he's telling me I'm offering this great deal. And he's telling me, Adam, it can't be true because the guy at Chase is telling me 20% down. So what's happening is, some of these big banks are just putting their own rules in place. Despite Fannie Mae's guidelines, they're called overrides, right?
Yeah.
And basically what they're doing is they're saying, hey, yes, we do these loans, but only with 20% down. So what's happening is you have a lot of people thinking they can't do these smaller down payments. It is an exception. It is not true. That's not to say when you get into the jumbo world in the $1 million range, all bets are off and it's a totally different conversation. But right now, any client in New Jersey, New York, most of the counties wants to borrow $765,000, they can put a down payment of 5% down with good credit.
Okay, nice. Yeah, it sounds like the banks are at 20%. They're really looking at protecting their investment, not really looking out for.
Correct. And what I am also seeing, Rob, and I think you know this because we always talk.
Oh yeah.
In my business, it's all about niches, right? Not every mortgage guy, although we may have a lot of product, doesn't always have the best of everything for everybody.
Yeah.
But what I am seeing now is loans that in the past, clients may have gone to other places for, like a large banking institution for a larger size loan. They're not going there. And they're not even going there on the 5s and the 6s and the 7s, right? So I think if you're a mortgage banker or a mortgage broker, and 2 years ago you were complaining to your manager because you lost the $700,000 loan, that's the loan that's actually coming to us these days as well, right?
Yeah.
Again, I think once you get over 765, things are a little different and you really got to check day to day. But I am seeing, yes, it's clients that might normally go other places coming because they need the options and the flexibility.
Yeah.
And they want to close with getting good service. That's the other thing. But I try not to ever bad talk anybody, Rob. So
Yeah.
Just
definitely the service, I think, is a huge part of the whole process on it. And I always appreciate the service that you provide for my clients. But it sounds like a lot of these ideas would also work just in the refinance world as well.
Absolutely. I think with refinances,
and especially with the rates.
Same type model. Clients call up a lot of times, Rob, and they say, I want to refi. And I ask them, why do you want to refi? And they always say the same thing. I want to save money, right? That is it's kind of difficult because there's two ends in a refi.
Yeah.
There's saving money on a monthly basis, and then there's saving money in the long run, right? And when you're doing a refi, if you're dealing with a good mortgage person, they're giving you both sides. I never do a mortgage for somebody and show them one side. And I'd love to tell you, because I'm the greatest guy in the world and I'm so honest. I believe I am a nice guy. But the reality is Rob, you really can't get your clients confirmation on the product that they want if they don't really understand what they're agreeing to. So what'll wind up happening is, if you only explain A, one side of it, you're talking to Uncle Johnny at dinner, and Uncle Johnny steps in and says, well, what about this? And I didn't speak about it. And when they look, the numbers they're not what we spoke about. It winds up being a huge waste of time for everybody, right?
Yeah.
So I want a client to understand, hey, I'm going to save you $500 a month on this, right? On the refi. However, in 10 years from now, when you look at your mortgage balance, you're going to owe 20 grand more on my loan.
Yeah.
But don't forget about the $500 times 12 is 6,000.
Yeah.
Times the 10 years is 60 grand.
Yeah.
That's how you weigh it to see if it works. So yes, all of that. And then there's the other thing too, right? If you've been in your mortgage for many, many years and you're paying off a lot of principal, there's a lot of people that are saying, whoa, I don't want to do that because I don't want to bet in with the real estate market.
Yeah.
Rather spend less money, pay the interest, and take the money and, invest it or leave it in my bank.
Yeah.
So there's a lot of opportunities. And Rob, I think the key is there's no two similar situations. There's no two similar. I apologize. That was one of my kids, unfortunately, when you're doing this stuff at home. There's no two similar situations, and you really got to get to know each client and exactly what they're looking for, right? And what makes them tick, and what gets them excited, and what scares them, right? And so when a client says, what's the rate? It's really, well, let's talk about what you're looking for before we even talk about it, because I wouldn't even know what suggestion to make.
Yeah. And what would you recommend for people who do want to take advantage of this rate right now? What can they do to move forward?
As far as refinancing?
Yeah, refinancing, yeah.
All they would do is make the call. Once you
Call?
make the call, we determine, whether it makes sense or not, right? I try to spend a lot of time up front before the client gives me their documents. I really try to get to understand the needs.
Yeah.
Right? I don't want to work on a file that doesn't make sense for them, right? And as we said before, right, we're all extremely busy. So if you're not using your time accordingly and getting through it in the beginning, all you're doing is setting yourself up for disaster for the client and for us. So the one thing your clients will be assured is they'll get the straight talk from me. Okay. And, if it makes sense, great. And if it doesn't, at least they can put their head, on their pillow at night and know that they have the best mortgage.
Yeah. So even before they start getting their documents, the first thing to do is just have that phone call.
Correct. Yeah. Let's just have a phone call, right? There may be very little to talk about. There may be a lot. And I wouldn't know what to tell you, what to give me until I know who you are and what you got.
Okay. Perfect.
Makes sense?
Makes a lot of sense. Well, thank you so much, Adam. As always, it's a pleasure. You got any weekend plans?
I do. I'm getting in the car and we're headed on about a 10, 11 hour trip down to South Carolina to play some lacrosse and a tournament with my sons. Yep.
Yeah, I brought that up because I just wanted to say I'm kind of jealous of that. While you're doing that, I'll be running around busy up here in New Jersey.
Well, I just hope everybody wants to hang out with me still after I get back from there.
Well, that's great. Well, I hope you have a great trip. Enjoy the time with your family. I'm looking forward to seeing photos.
Well, my friend. Thank you, buddy.
All right. Thanks so much.
Bye.
Hi everyone, it's Rob again. If you enjoyed this video, please give us a big thumbs up and subscribe to our channel. And as always, happy investing.